Good morning, trading world. It is February 9th, 2022, 8:27 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the SPY. The title for today's outlook is Explosive Rally Ahead. Will it implode? We come into the pre-market this morning and I'm seeing bids under the market. And when I say bid under the market, I mean all major sectors. So we could jump pretty good today. However, how long will it last before this explosive rally implodes on itself? Looking at the calendar, we need not look no further than Thursday, where we get the CPI and Jobless Claims report. We could explode up today or most of today and get this. We could even have a good jobs number and good CPI numbers and still implode. This is because we have so many people hooked on the Fed juice. We could absolutely have good numbers for both reports and implode because some fund managers will see that as a sign that the Fed will have the green light to be more hawkish faster, meaning raise rates, continue to shrink the balance sheet. A good part of last year I pointed out how before big reports, bad news was good news and we could buy the rumor and sell the news. And some of y'all thought that was bizarro world. Now we could be in the state where good news is bad news and we could buy the rumor and sell the news. Another piece of the puzzle, or my early warning implosion system, is that on the 4-hour time frame data set that I track, all 9 items being tracked are bullish. Whenever this happens, there will be a drop based on that time frame's levels soon. This lines up with the forecast made for the week at the beginning of the week, that the week's outlook has a bearish bias closing below the 448.7. Also, did I mention how close we are to the 10-year going above 2%? This in itself will be a real downer for the market. Right now, the TNX is at 19.53. That's just over or just under 50 basis points from 2%. And yesterday we had got as close as 19.61. So around 40 basis points, we'll say, from that 2% marker. When that 10-year hits 2%, expect a big plunge. Now, with all of that out of the way, let's get to the key levels for today. All right, here we have the key levels for today, starting with resistance. The jack resistance is going to be the 454 through 455 area. The queen resistance is going to be 457 through 458 area, and king resistance is going to be 459 through 460 area. On the support side, we have jack support at 453 through 452. The queen support at 450 through 449. And king support of 446 through 443. going into today, the main thesis is bearish, closing below the 450.94 area. The projected high or possible short entry is going to be 457 through 458. And the target or low for today would be the 450 through 449 area. Now, the alternate thesis is bullish, closing above 450.94 with a projected high of 458 through 460. Now, when we get to levels like this where everyone sees or expects a bearish bias or to run into a wall, if we make it or get a close on the other side of that wall, expect a very explosive move. To a degree, this has already happened because the wall was at that 454 area, 453, 454 area. And mind you, this is an area where we have a huge overhead supply. So, if we make it through the 455 area, close above that 455 area, that jump could be very explosive, taking us all the way to 458 and possibly 460. So it's just something that I want you to be aware of. The more people that pile in on the bearish side, the stronger that opposite move, or people call it a bear trap, or a short squeeze is the word that I'm looking for. But the more explosive that short squeeze can be, the more people we have stacked against that move. And so there's going to be so many more people jumping out trying to buy back their shorts, fueling that move to be higher and higher. So be aware of that. The current minor channel we are in is 463 through 453. We've peeked our head in the channel above where we are, or where we were yesterday. Now the major channel being 471 down to 453. Be aware, something I spoke about on Monday is basically the springboard diver formation. And that's pretty much where we explode higher for a day. Then in the next day or so, we take a big nosedive. So be very careful of that. The other thing that I'm going to be glued to today, I often speak in these analogies, how the market is a runner. Well, when it comes to the different time frames, imagine not just one runner, but imagine each time frame being a runner in a relay race. And each runner has to run their lap or cycle before handing the baton off to the next time frame or runner. So the relay race that's going to be most important today is the handoff between the 4-hour chart and the daily chart. Whether we get that full cycle on the 4-hour and the daily steps in and is ready to run as well. Because right now we're looking at a daily that is in overbought territory. Bringing it up on another chart here just to be clear. we're in overbought territory. However, on the daily, we're still at a rest area for the daily's marathon. We're at that halfway point where we could decide to continue to consolidate, or we can take off running in the other direction, which would be bullish, or run in the bullish direction on the daily. So this is why watching that handoff is why I'm going to be so glued to it today, because this has implications for the rest of the week and next week as far as positioning and how to look at things going into next week, because things are taking off on the daily, and they're taking off even though looking at the MACD on the daily, it's still the trend is bearish, but however, momentum is changing to the positive side on the daily. So this is going to be something to really keep our eyes on to see what happens, because there is a point where we can kind of get into this hyperdrive. And if we move into hyperdrive where things really move really fast, and based on the RSI, we leave that halfway point and we take off pretty fast to the 70% area, which is considered overbought or extremely overbought on the RSI. This bodes well for bearish positions, because if we move fast and we get to that 70% area pretty fast in the next couple of days, this really bodes well for the bears, and it could be really something to pay attention to in the coming weeks, on something that I've been forecasting for a while now, as far as the end of February, beginning of March being a huge event for the bears. So with all of that said, let's move on to today's scenarios. All right, the first scenario we have today is going to be our rounded reversal day type structure. We could get a continued takeoff toward the queen or king resistance area, and I'm going to place emphasis on the queen resistance area today, because that's a huge resistance level on the 4-hour chart. And that's probably where we're going to find our midday chop today. And we're going to chop sideways there, and then probably using that same type of energy to find our way back down in the second half of the day. And one of the key contributors today is an expiration day. So while things are often known to happen on expiration days, so we could have this wild rounded reversal day type today. So that has a probability of about 35%. So this is one of those things to kind of look for today. Now, here we have our second scenario, which is basically a trend day up type structure. We get our open gap up and start a small fade at the open. And usually these fades will find support on or before the previous day's close. So the previous day's close was 450.94, which means at some point in time before then, or right there, we should find support and maybe chop sideways a little bit, because there's a lot of order flow at that 450 area. So we could see a little sideways, a little more pronounced sideways chop here before getting into our trend, a morning trend up for today, and heading towards that queen resistance area of 457, 458, where we should reach our midday chop. And we'll reach the midday chop there if this is the type of day that I am thinking that I'm following all the signs for. At that sideways chop, starting the second half of the day, we'll get a head fake up, and then at some point later in the day, we'll kind of settle into a slight fade going into the close. But it may not be that much of a fade. This is where things can kind of take turns. It could be a slight fade, or we can have a little more pronounced fade on the close today, on this trend up day. But what's going to be very prevalent is this 458 area, because busting through that 458 area to a good degree could cause another explosive move. So I'm not sure whether that will play out today or tomorrow, but keep an eye on that 458 area. And let's get to the next scenario. All right, the last scenario is going to be our expansive range day structure. We can look to set a decision area high boundary around the queen resistance area before chopping lower, then possibly another try pushing boundaries before trying to go higher and fading again. Now, when it comes to range days, there are so many different variations that these days could take. Now, the range day is the least probable scenario for today, but that's not saying much because the percentages or statistics are jumbled pretty close. So, in looking at a range day, keep in mind the previous close, because we could see a cross back below that previous close. And because it is so far away, it is going to make each and every day structure feel super large today, because we could fade and fall a long ways away before even crossing or getting to the previous close, which is going to differentiate the structure between each day. So on the range, if we fade and we break through the previous close, we are pretty much in a range day type structure. And like I say, those range day structures could have many different variations. We could have a variation where we cross lower first and then try to chop up toward that toward the resistance level, basically be something similar to this. So the main key that I'm looking for on the range day is crossing that previous close to kind of let me know not to expect continuation of certain moves. It's very important for the trend day structure and rounded reversal structure. So that's what I'm going to be paying attention to today. Those are the scenarios. It is always very important that you know your risk, especially on days like this where things can get explosive, moves can happen very fast. Know and define your risk and be comfortable with that. Again, the most important part of trading is your capital, and you want to guard that at all costs. And with that, as always, wishing you a successful trading day. Hope this information helps. Have a great day.